investing in real estate, there are many property types you can choose from, and our next guest says multifamily real estate has its advantages.
Here to explain is private wealth advisor with Ameriprise Financial, Trevor Shakiba, along with Vice President of CBRE, Derek Fasulo. Welcome back to the show. Great to see you, Derek. Trevor, let's first start off and let's look at the market today. We have a live look of what's going on and kind of walk us through this. It's been kind of a volatile day.
Yeah, lots of red. In fact, it's even further down. It was down to 250 here just a little bit ago. Moreover, a week ago, it was down over 700 points. So this last week has been the worst week on record for 2019. It's been volatile, and a lot of that has to do with uncertainty related to China and tariffs and this potential global trade war. But as usual, you can't get caught up in that, the noise. You need to stay focused on your asset allocation and your long-term financial goals. Just remember, anytime there's volatility, that equates to uncertainty. And so right now we're kind of dealing with that, but I don't think on either side it's really a good thing to have a global trade war. So hopefully this is going to come to a competitive fair agreement pretty soon.
In this current climate, it may be pushing people to explore some other ways to invest, real estate being one of them. Derek, that's why you're here today. Let's talk about multifamily investing. So essentially, does that mean like an apartment building? Like what qualifies as multifamily?
It does, exactly, an apartment building. So really any units or any property that has 5 units or more is considered multifamily. Your single family, your duplexes, you know, all the way up to fourplexes, people still consider that single family.
But that, I mean, buying something that has multiple units, for a lot of folks, they may think, okay, is this even an option for me? Because it could seem overwhelming, but what are some of the advantages to owning a multifamily unit?
More stability. So single family, you know, your renter moves out, you're vacant,
right.
No income. Multifamily, when you get to 10, 20 units, you have a couple renters moving out, no big deal. Still got the income, still have the cash flow. And so that's why it creates a little bit more stability than a single family investment does.
I mean, are apartment communities or apartments readily available for people to buy? I don't know if that sounds like a silly question, but I would think that single family homes, clearly, you know, we see the market for that.
Yeah, so over the past, I would say 5 years, we have seen these investor networks pop up. And so you can join these investor networks and you can get educated, and with the opportunity to buy your first deal, you can partner with people, because financing to come across in your first deal is going to be difficult. And so having that investor network, having those friends, having those partners to educate you and partner with you on those deals, that will open up the avenue to purchase your first deal.
Unlike the market too, it seems like real estate, it's almost like it's recession proof because people are always going to need a place to live, right? But Trevor, you say before stepping out into this world, you want to have the right team in place.
Yeah, you know, I think that pretty much goes for life in general, but definitely in this arena, you cannot do multifamily real estate on your own because it's going to be a little bit more complicated, nor do you want to do it on your own. So you want to put together this team, and that could be financing like Derek. Plus, you actually want that input where he can come back and say, you know what, that deal doesn't look all that good, or this looks really good. But this could also be property manager. It could be your attorneys, insurance agents. One other point here is if you're just starting out, again, 5 units or more, especially if you get up into the 50 units, the property manager and that company is key. You don't want to get a deal, then try to put together your all-star team. That's opposite. You want to interview your property managers and know what you're doing because they are critical to the success of that investment moving forward.
Yeah.
That's that first line of defense, right? For
Exactly.
you, absolutely. Derek, how do we get that first deal financed? So you talked a little bit about partnering, but dig a little deeper for us.
Sure, so as Trevor mentioned, on the first deal, what you need to look for is putting together a good team. So and this is before you even start looking, I would interview property managers. I'd let them know what you want to see. I would meet up with sales brokers, let them know what kind of deals you want to purchase, so find that team. Secondly, there is going to be some financial requirements, and I'm talking about as the buyer, there's going to be certain net worth, there's going to be certain liquidity requirements that you need to show the lender in order to prove that you have the money to put up to purchase the property, and you have the money set aside in case something happens. And so, and kind of lastly,
You want to be able to cash flow the property, right?
Yeah,
Like, so make
exactly.
money on day one.
Yeah,
Right.
so cash flow. So look for more stable deals. Don't go and buy a property that's 50% occupied. Don't do your fix and flip on the first deal. Buy properties that are cash flowing day one. Lenders like those properties. You're going to get better terms. You're going to get better financing, and it's going to be easier to run once you acquire the property.
And guys, we're tight on time, but let's briefly just talk about Houston's bigger picture. So we're showing economic growth, right? Population growth. And when it comes to interest rates, they're still really low right now. So now could be a good time.
Yeah, and I'll let Derek speak to Houston because he's kind of an expert on that. But big picture, we are in the longest economic expansion of all time. So look, we are going to eventually have a recession, but trying to predict that is fool's gold.
Yeah.
But overall, Houston and interest rates have been in a fantastic place to look at investments like this.
Yeah, so population growth, job growth, Houston, it's been there. I mean, we've acquired 1 million people in the past 8 years. That's phenomenal, right? And over the next 10 years, we're supposed to gain another 1.4. So what that creates is the demand. China, tariffs, instability in the stock market, but that also depresses interest rates. And so it's a great time to buy. Interest rates are the lowest they've been in, I think, 3 years.
As my mom always said, buy real estate, they're not making any more of it, right?
That's right.
All right, well, guys, thanks so much for stopping by. Trevor, great to see you. Derek, come by anytime. We always like learning how we can make more money, right?
Absolutely. Great information, guys. Thanks so much. To connect with Derek, just email him at derek.fasulo@cbre.com. And if you'd like more information on financial planning or to schedule that complimentary initial consultation with Trevor and the Shakiba Group, you can call 281-724-9917 or visit theshakibagroup.com.